Good morning. This is Larry McMillan with a stock market update on Monday, October 20th. Well, we saw some volatility last week. It seemed to follow on the heels of the big market meltdown on October 10th, which really only lasted one day. And even late last week, we had a pullback. VIX went shooting higher. But in the end, the market is still strong and still going higher. In fact, S&P or the S&P futures have pulled back into the 6,500 to 6,550 range 5 times now since mid-September, and every time have rallied strongly. So there are clearly people who were willing to buy in that area, trying to buy the dip, and so far it's worked very well. What we can discern from this as well is that if we fall below 6,500, a lot of those people are going to become sellers. So that is a crucial level. But for now, as long as S&P is above 6,500, everything should be pretty good, despite what some of the other indicators might be saying. So let's take a look at those. The equity-only put-call ratios have turned higher, indicating sell signals, and they've come from very overbought conditions. So typically those would be strong sell signals. But again, you can't really fight the price of the market, no matter what your indicator might say. On a more positive note, breadth has been improving a little, and cumulative volume breadth has actually made some new highs last week, new all-time highs. So that was support for the all-time highs being recently made by S&P. New highs versus new lows on the New York Stock Exchange is still holding in there. There were more new lows than new highs on Friday. If that were to repeat itself again today, then that buy signal would be stopped out. The, I guess, sort of crazy area is volatility and VIX in particular. VIX went shooting up to 29 Thursday night, overnight, and then fell back all the way to 20 by the close on Friday. So that's what we call a spike peak buy signal. That's a buy signal for the stock market. And that will remain in effect for a month or until VIX closes above 29 again. What made that happen, I really don't have a clue. I mean, people are speculating everywhere as to what's going on. But it seems like people are so concerned that this market might be topping that at the very first indication of trouble, I guess, some selling a little bit on Thursday afternoon, the buyers come in for the VIX calls. So the VIX calls are way overpriced. If you want to hedge yourself, you're way better off to just buy some out-of-the-money S&P put spreads or something like that, bearish put spreads. Anyways, the construct of volatility derivatives even got distorted by that action on Friday. For a minute there, the October futures were trading well above the price of the November futures. In the past, when that's happened, that's been a really bad sign for the stock market. But by the end of the day on Friday, that had already gone away, and it's going further away today as the market is rallying even more. So there's a certain amount of panicky behavior out there, and it's certainly reflecting itself in VIX. But I would remind you that no matter what the individual indicators might be saying, as long as S&P is above 6,500, this is still a bullish and strong market. Eventually we'll go higher, we'll establish some other support levels, perhaps find a resistance level, who knows. But for right now, that's the main thing to keep in mind. And yes, you can hedge yourself. You can try to trade some of these other signals as they might occur. But in reality, the strength of the S&P is still quite impressive. So I invite you to visit our website if you'd like to keep up with these indicators daily. Check out some of our daily newsletters. And meanwhile, have a great week trading.